The global landscape is changing. Emerging economies are on the rise. China in particular is challenging the US economically. This shift is putting pressure on the dollar's dominance. Countries are seeking alternatives. They want to reduce their reliance on the dollar. This is partly driven by political considerations. Some nations view the dollar's power as a tool of US foreign policy. They are wary of being caught in the crosshairs of US sanctions. The rise of new technologies is also playing a role. Digital currencies and blockchain technology are gaining traction. These innovations have the potential to disrupt traditional financial systems. The dollar is not immune to these challenges. Petro-Dollar power play, Saudi Arabia's strategic maneuvers. Saudi Arabia, the world's largest oil exporter, has long been a key pillar of the petrodollar system. This system has been instrumental in shaping global economic dynamics. This system, established in the 1970s, saw Saudi Arabia agree to price its oil in dollars in exchange for security guarantees from the US. This agreement was a cornerstone of the economic relationship between the two nations. This arrangement bolstered the dollar's dominance. It created a continuous demand for dollars, as countries needed them to purchase oil. The petrodollar system essentially tied the value of oil to the strength of the US dollar. However, recent moves by Saudi Arabia suggest a potential shift away from this system. These moves are being closely watched by global financial markets. The kingdom has signaled its willingness to explore alternative currencies for oil transactions. This is a significant development in the global oil market. This includes accepting the Chinese yuan for oil sales to China. The acceptance of the yuan marks a notable diversification in Saudi Arabia's economic strategy. This move, while not a complete break from the petrodollar, is significant. It indicates a strategic shift in Saudi Arabia's approach to its economic partnerships. It signals a growing willingness to diversify away from the dollar and engage with other currencies. This diversification could have far-reaching implications for global financial stability and the future of the petrodollar system. Challenging the dollar's hegemony. BRICS, an acronym for Brazil, Russia, India, China, and South Africa, represents a powerful bloc of emerging economies. These nations have been actively seeking to reduce their dependence on the dollar. They have established their own development bank, known as the New Development Bank, NDB. This bank offers an alternative to the World Bank and the IMF, institutions traditionally dominated by Western powers. BRICS nations are also promoting the use of their own currencies in bilateral trade agreements. This reduces their reliance on the dollar for international transactions, making their economies more resilient. This move towards greater financial independence is driven by a desire to challenge the existing global financial order. BRICS nations aim to create a more multipolar system that reflects their growing economic clout and influence. By working together, these countries hope to reshape the global financial landscape, making it more inclusive and fair. The combined GDP of BRICS nations is significant and their influence continues to grow. As they continue to collaborate, the BRICS nations are poised to play a crucial role in the future of global trade and finance. De-dollarization, a gradual erosion or a seismic shift. The recent moves by Saudi Arabia and the BRICS nations have raised significant questions about the future stability and dominance of the US dollar in the global economy. Is de-dollarization, the process of reducing reliance on the dollar, a gradual erosion or a seismic shift? The answer is complex and multifaceted, involving numerous economic and geopolitical factors. While the dollar's dominance is unlikely to disappear overnight, its influence is gradually waning. This decline is not sudden but rather a slow and steady process influenced by various global trends. Several factors contribute to this trend, including shifts in global trade patterns, changes in international financial policies, and the strategic decisions of key global players. The rise of emerging economies, the growth of alternative reserve currencies, and geopolitical considerations all play a significant role in this evolving landscape. Countries like China and India are becoming more influential in global trade. However, the dollar's deep liquidity, the stability of the US economy, and the lack of a viable alternative still make it the preferred choice for many international transactions. Its entrenched position in global finance provides a buffer against rapid decline. The future will likely see a more fragmented system, where no single currency holds absolute dominance. Instead, multiple currencies will share the stage. Multiple currencies will compete for dominance, each trying to carve out a significant share of the global market. This competition could lead to increased volatility and uncertainty in international finance. The dollar will remain a major player, but will face increasing competition from other currencies. This evolving dynamic will shape the future of global trade and finance, making it a critical area to watch. How Saudi Arabia can end the petrodollar system. Saudi Arabia holds a pivotal role in the global oil market, traditionally trading oil in US dollars. To end the petrodollar system, Saudi Arabia could start pricing its oil in other currencies. This would be a significant shift in the global economic landscape. Saudi Arabia could establish bilateral trade agreements with major oil-importing countries. These agreements could stipulate payments in currencies like the euro, yuan, or even a basket of currencies. Additionally, Saudi Arabia's Vision 2030 aims to diversify its economy away from oil dependency. This diversification could reduce the kingdom's reliance on the dollar. Such a move would have far-reaching economic impacts. The dollar's dominance in global oil trade could diminish. While the transition would be complex and gradual, it could fundamentally alter the dynamics of international trade. The shift away from the dollar has significant implications for global trade and investment flows. As more countries adopt alternative currencies, we can expect to see a more fragmented global financial system. This could lead to increased transaction costs and currency volatility. Businesses will need to navigate a more complex currency landscape. This could pose challenges for companies engaged in international trade and investment. On the other hand, a more multipolar system could also create opportunities. Emerging markets may benefit from increased access to capital and investment. The diversification of reserve currencies could also reduce the global economy's vulnerability to shocks in any one currency. The future of the dollar. Adapting to a multipolar world. The dollar's future hinges on the U.S.'s ability to adapt to a multipolar world. The U.S. needs to address the concerns of emerging economies and ensure that the global financial system is seen as fair and equitable. Furthermore, the U.S. should focus on maintaining a strong and stable economy. This will ensure the dollar remains an attractive reserve currency. Innovation is also key. The U.S. should embrace new technologies, such as digital currencies. This will help maintain its leadership in the evolving global financial landscape. Several potential scenarios could unfold in the coming decades. One scenario is a gradual decline of the dollar's dominance, where other currencies gradually gain ground, leading to a more multipolar system. Another scenario is a more abrupt shift away from the dollar, which could be triggered by a major geopolitical event or a loss of confidence in the U.S. economy. A third scenario is the emergence of currency wars, where countries compete aggressively to devalue their currencies to gain a trade advantage. This could lead to protectionism and global economic instability. Hedging against currency volatility. The evolving global currency landscape presents both challenges and opportunities. Businesses and investors need to be aware of the risks and opportunities. Hedging strategies can help mitigate the risks of currency volatility. Diversifying investments across different currencies can also reduce exposure to fluctuations in any one currency. Staying informed about geopolitical developments and economic trends is crucial. This will help anticipate potential shifts in the currency markets. Embracing a new era of global economic order. The world is moving towards a more multipolar economic order. This shift is reflected in the evolving global currency landscape. The dollar's dominance is gradually waning as other currencies gain traction. This transition presents both challenges and opportunities. Businesses and investors need to adapt to this new reality. Embracing a more multipolar system requires cooperation and understanding among nations. It also demands a willingness to reform the global financial system to make it more equitable and representative of the changing global economic order.